$115 billion. That's how much money is currently locked in a three-way battle that's reshaping the entire cryptocurrency landscape. We're talking about the most intense financial war you've probably never heard of, where billions of dollars flow in and out every single day, and three titans are fighting for complete dominance of the Bitcoin ETF market. This isn't just about numbers on a screen. This is about the future of how millions of people will invest in cryptocurrency. And by the end of this video, you'll understand exactly which horse you should be betting on in this epic financial showdown. Remember when Bitcoin was just fake internet money that only tech bros and libertarians cared about? Those days are dead and buried. We've witnessed the most dramatic transformation in financial history. Bitcoin has gone from basement dwellers trading digital tokens to the boardrooms of Wall Street's biggest players. The turning point? The SEC's approval of spot Bitcoin ETFs in 2024, which opened the floodgates for institutional money to pour into cryptocurrency like never before. Suddenly, your grandmother could buy Bitcoin through her retirement account without ever touching a crypto wallet or understanding what a private key is. But here's where things get interesting. Not all Bitcoin ETFs are created equal. In fact, three clear winners have emerged from the pack, and they're locked in an all-out war for your investment dollars. Each one has a completely different strategy, different strengths, and different reasons why they think they deserve to hold your money. Let me introduce you to the heavyweight champion first, BlackRock's iShares Bitcoin Trust, ticker symbol IBIT. When BlackRock enters any market, they don't just compete, they obliterate the competition and redefine what dominance looks like. IBIT has amassed a staggering $85.4 billion in assets, which makes it not just the largest Bitcoin ETF, but one of the most successful ETF launches in financial history. They're holding over 747,000 Bitcoin in cold storage through Coinbase custody, and they command 75.6% of the market share among these three titans. This isn't just about size, it's about institutional credibility. When pension funds and sovereign wealth funds want Bitcoin exposure, they call BlackRock. The expense ratio is a reasonable 0.25%, and they've delivered 77.74% returns over the past year. IBIT is the safe choice, the predictable choice, the choice that screams, "We're not going anywhere." But then there's the performance beast, Fidelity's Wise Origin Bitcoin Fund, trading under FBTC. While BlackRock might have the size, Fidelity has something arguably more important: results that make your jaw drop. FBTC has delivered 91.4% returns over the past year, absolutely crushing IBIT's performance. They're sitting on $22.7 to $24.1 billion in assets, making them the clear number 2 player. But here's what makes FBTC really interesting. They use Fidelity Digital Assets as their custodian, not Coinbase like most others. This custody diversification is huge because it reduces systemic risk across the entire ecosystem. FBTC launched on January 10, 2024, with the same 0.25% expense ratio as IBIT, but they've been consistently outperforming the market leader. If you're the type of investor who cares more about returns than brand recognition, FBTC is speaking your language. And then we have the scrappy disruptor, ARK 21 shares Bitcoin ETF, ticker ARKB. Don't let the $4.81 billion in assets fool you into thinking this is a small player. ARKB is the David in this David versus Goliath story, and they're throwing stones that are hitting their targets. Their secret weapon? The lowest expense ratio in the game at just 0.21%. When you're dealing with long-term investments, that difference in fees compounds dramatically over time. ARKB represents a partnership between RK Invest's reputation for disruptive innovation and 21 Shares' cryptocurrency expertise. They've delivered 16.75% year-to-date returns, and they're specifically targeting investors who want Bitcoin exposure without the complexity of direct cryptocurrency ownership. ARKB is the choice for cost-conscious investors who believe in the power of innovation over institutional inertia. Now here's where this story gets absolutely wild. The daily flow wars that are happening behind the scenes. Every single trading day, these ETFs are experiencing inflows and outflows that would make your head spin. We're talking about swings of hundreds of millions of dollars happening overnight. On August 15th, IBIT saw $114.4 million flow in, but just a few days later on August 21st, they experienced $129 million flowing out. FBTC isn't immune either. They saw $246.9 million in outflows on August 20th. Even ARKB, the smallest of the three, had $46.7 million flowing out on August 15th, followed by another $43.28 million on August 21st. What's causing these massive swings? It's a combination of profit-taking, macroeconomic concerns, and institutional allocation strategies that are constantly evolving. When Bitcoin's price moves, these ETFs feel it immediately through their flow patterns. Institutional investors aren't just buying and holding, they're actively trading these positions based on market conditions, regulatory news, and portfolio rebalancing requirements. This creates a feedback loop where ETF flows can actually influence Bitcoin's price, which then influences more flows. It's like watching a financial hurricane where billions of dollars are the wind, and these three ETFs are sitting right in the eye of the storm. The volatility isn't a bug. It's a feature of a market that's still maturing. According to CFRA research, cryptocurrency ETFs have attracted $29.4 billion in cumulative inflows through August 2025, showing sustained institutional demand despite the daily chaos. CoinShares data reveals that 13 F-filers reported $33.4 billion in Bitcoin ETF holdings at the end of Q2, up 57% from Q1. This institutional adoption is driving the daily battles we're seeing, and it's only going to intensify as more traditional investors discover these products. So with all this chaos and competition, how do you actually choose between these three titans? It comes down to what kind of investor you are and what you value most. If you prioritize maximum safety and liquidity above everything else, IBIT is your champion. BlackRock's institutional credibility means this ETF will likely survive any market downturn and maintain liquidity even in the worst conditions. You're paying for the peace of mind that comes with backing the 800-pound gorilla of asset management. If you're a performance-focused investor who wants the best historical returns, FBTC is calling your name. That 91.4% one-year return isn't a fluke. It's the result of Fidelity's deep expertise in both traditional finance and digital assets. Plus, their custody diversification through Fidelity Digital Assets reduces your exposure to Coinbase-related risks that affect most other Bitcoin ETFs. For cost-conscious investors who believe in the power of innovation, ARKB offers the lowest expense ratio at 0.21% and the backing of two companies known for pushing boundaries. Over decades of investing, that fee difference compounds significantly, and you're supporting a fund that's focused on long-term disruptive trends rather than just following the herd. But here's the reality check. All three of these ETFs face the same fundamental risks. Bitcoin volatility affects them equally. Regulatory changes could impact all cryptocurrency investments simultaneously. Custody security, while institutional grade across all three, still represents a systemic risk to the entire sector. The key insight is that these aren't just Bitcoin proxies. They're sophisticated financial instruments with different operational structures, custody arrangements, and strategic focuses. The $115 billion crypto ETF war isn't just a story about three financial products competing for market share. It's the story of how traditional finance is absorbing and legitimizing the cryptocurrency revolution. IBIT offers institutional dominance and maximum credibility. FBTC delivers proven performance with custody diversification. ARKB provides cost efficiency with an innovation focus. Each one represents a different philosophy about how Bitcoin should be packaged and delivered to mainstream investors. The crypto ETF wars are just getting started. As more institutional money flows into this space and regulatory clarity improves, we're likely to see even more dramatic developments, new players entering the market, and potentially game-changing innovations in how these products operate. The $115 billion question isn't just which ETF is best today, it's which approach to Bitcoin investing will dominate the next decade. Which ETF would you choose and why? Are you Team BlackRock's institutional dominance, Team Fidelity's performance excellence, or Team ARK's disruptive innovation? Drop your thoughts in the comments below, and if this deep dive into the crypto ETF battlefield was valuable to you, smash that like and subscribe button because the financial revolution is happening in real time, and you don't want to miss what comes next. The future of money is being written right now, and these three titans are holding the pen. This video is for educational and informational purposes only. Investment performance shown is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thanks for watching.